Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, we have 5 stocks for you that are in serious trouble. We believe they're in serious trouble. They're major stocks. We'll be looking at those in just a moment. But let's take a look at the indices first of all. We'll start with the Dow. The Dow actually gave us a signal yesterday right here on 12/10 at 17,603. Now the market is higher than that today. However, the market isn't over with for the rest of the day. So a couple of things to bring to your attention. The first one is that we've come back down. First one is we've come back down on the RSI line. Watch this very carefully. If we close below that, it's not going to be a good sign. You've also broken below the parabolic, which is the first time you've done that since way back here in October. And the other one you want to look at is the potential of a Fibonacci retracement. We talked about those before. That's going to take this market quite a bit lower. So let's move on to our next market. Next index we're looking at is the S&P 500. Much the same pattern there. We had a signal actually a day before on the 9th. And you can see that 2034, it's 2052 last, so it's a little bit higher now, but that's with today's rally, that's with the very positive numbers that came out, sentiment, and I think that's going to change the market. But reality is we've turned down in the RSI, we're back to the 50 line just above it. Watch this very carefully. That could be your tip-off that things aren't good. You're also below the parabolic, which is another negative sign. Next, we're going to look at the Nasdaq. Now, the Nasdaq is a different animal because look at the Nasdaq. The monthly and the weekly is up, which is different from the Dow and the S&P 500, where you only have the monthly up and the weekly trade triangle is negative, indicating a sideline position. So this is the last one that's holding out. And look at these markets, very close to where we were yesterday. Very choppy, very volatile. People are very nervous about these markets overall. So let's see how things play out. But the overall trend is still positive. You found good support right at the RSI 50 line, which is where it should find support. Let's watch this very carefully. And where we close for the week, it's Thursday today. We could be closing this week lower, which is very possible depending on how we close today and how we close tomorrow. So let's watch that very carefully. Let's go into those 5 stocks we talked about right now. First stock we're looking at is Google. Now you can see both the weekly and the monthly. Both trend indicators are negative, indicating this market's heading lower. Now we also have a minus 75 indicating it's not a super strong downtrend, but it is a downtrend. Key level to watch right here, in our opinion, is going to be this level right here. So if you see a close below 508, watch out. This market will really start to accelerate to the downside. You can see we're below the 50 line in the RSI. Not a good sign either. So let's see how this plays out. The next stock we're looking at is Tesla, symbol TSLA. We talked about this before. Remember, we had a weekly that came in right here on the 1st of December at 236, and you can see that's really has been under pressure since then. The monthly kicked in at 217. Now both of those positions are profitable. Certainly this is where the major trend kicked in. Key level on Tesla on the fib retracement. We will be looking for the Tesla to trade back down to the 150, 160 level. So that's the 150, 160 level. That's on a 50% fib retracement. That's Fibonacci. This is the indicator right here. And we could be seeing a potential of 129.15, and that's a 61.8% fib retracement. So that's where we have the potential for this market. Very oversold. Not to say it can't go lower, but the trend is definitely negative for this market. And you can also flip this over from where we are here at the 220 up to 260, that's 40. Take away that takes you down to 180. So definitely negative on Tesla right now. Our next stock is Amazon, and here we have all indicators are negative. Amazing considering this is a giant of retail. You also have our numbers below the 50 line, which is right here. You can see right there it's below the 50 line, indicating further weakness. But we're just sort of jockeying around right now. But generally speaking, the trend is not looking good for Amazon, which is really surprising. And maybe it's the competition from Alibaba. Maybe it's the fact that they keep spending all this money on doing new things. It's a great service, but it's not making the kind of money that investors think it should make, and the love affair between Jeff Bezos and investors seems to be on the wane right now. So negative on this stock. Next stock we're looking at is Netflix. You may remember Netflix is a streaming service. You can see we've been negative on this from 412, 339, which is, I think you'll agree, is quite a difference from where we are right now. And generally speaking, I think we can see this market continue to be on the defensive. The line in the sand for this stock is 299. If we go below that line, this market's going to accelerate to the downside, and I think we could see much, much lower levels. Let's take a look at our last stock. Last stock we're looking at is Twitter. As you can see, we've been negative on this stock from 39.94. It's 37. Our weekly kicked in much, much higher right up here, but nonetheless, this trend continues down. If we go below 29.50, that's the line in the sand, this will be a very negative indicator for this stock, indicate lower levels. All of our trend triangles are negative. Minus 90, a strong downtrend. We expected to see this continue to erode, even though it's very oversold. It doesn't matter. For some reason, they have been unable to make money and monetize their customer base. Hey, this is Adam Hewison for Market Club. Thanks for stopping by. Every success using our service. And their 5 stocks I think you should avoid right now.